What's up traders, it's Howell here, and in this video, I'm going to be giving you a good rundown on options trading and what are the best ways to actually trade them when you're buying the option just straight outright. Okay, we're not going to talk about credit spreads and stuff like that, we'll touch on a little bit, but we're going to talk about what are the best ways and what are some ingredients that's going to help you be successful in the markets by buying a particular options and some things around the option that's going to help you do really well in the markets. Okay, again, this is just general advice only. Please do not trade options unless you've got a really good understanding of the four key points that I'm about to walk you through here before you start getting into market. And of course, whenever you start trading on a small amount of money that you know you can afford and risk, and then build your confidence from there, okay? Slowly and surely. You don't want to be sprinting into this game, because if you sprint, you're going to trip and you're going to end up back where you are. Let's take it nice and slow and easy, and you end up getting to your goal much quicker and much faster, okay? So let's have a look at this here. Again, I'm not going to go through the basics of what options are. That's not what this video is all about. This is to help you how to actually have the advantage on options trading. Now, some people say, John, should you trade iron condors and should you trade credit spreads and stuff like that? And I would say, for the person who's actually willing to put the work in, it's so far easier to make money just from buying the option outright than it is just simply doing credit spreads and stuff like that. Make sense? And the reason why is credit spreads are automatically give you the advantage against you by doing that. But by doing this, you can do a lot of good things with it. Anyway, let's actually walk you through some really key points that you can do when it comes to call options and it comes to put options. Now, a general basics here: when you're trading a call option, you generally have a bullish view, meaning you think the market's going to go up. And if you're trading a put option, you're generally going to have a bearish view, meaning the market's going to go down here. Okay? Now let's have a look at this here. Let's have a look at the four key points that you need to understand to give you the advantage out there. Firstly, when buying options, the first thing you want to do here, okay, when buying options is you want to be trading 6 weeks out, a minimum of 6 weeks out. This is going to give you what you call a lot of time value, because what happens is when you actually buy the option, if you're trading and it's only got like 2 weeks to run, the market you might trade a call option, for example, okay, and if you trade it maybe a week or 2 weeks to run before that option expires, the market might only go sideways, okay, it might not move at all. But your option is going to go down because the time in that option is getting shorter and shorter and shorter. And then there's a time value and there's an intrinsic value. And the time value is what I explained just then. Make sense? So that's the reason why when you're trading this, you want to have at least 6 weeks to run, if not longer. I'm a day trader. I'm not a day trader. I'm a maybe what you call maybe a swing trader, what you call it, but I'm generally in between 2 and 5, sometimes up to a couple of weeks maximum in my particular trades. I trade the daily chart and sometimes even going down to the intraday charts. But that's just generally what I'm looking for. So I know I need at least 6 weeks to run. So I'm not having the time value, okay, I'm not having this time value here, this time value, destroying the value of my options and putting the odds against me. Make sense? So now we're going to have 6 weeks out to run here. 6 weeks out to run there, okay? Now, number two here. Number two, we need to be trading first or second in the money. So many people here, let's have a look at this here. First or second in the money means this: if we're trading a call option and we have a bullish view, that means we're going to, if the share's trading at say $20, we're going to be looking at say the $19, if that's the next strike down, or the $18 and so on and so forth, okay? That's what we call in the money. Again, this is not a basic understanding. This is just some rules to stick to when trading, okay? So first or second in the money with 6 weeks to run. Reason why is because now we have intrinsic value. If it's a call option, you're buying an option below it, you have now intrinsic value. That's going to give you a buffer, so it's not going to hurt you too much if the market goes against you, or should I say when the market goes against you, you can cut your losses short without it damaging your account or that trade too much. Make sense? So that's what happens there. Now thirdly, here's a vital thing: having 2 exit strategies. Have an absolute point if the market gets down, because if the market's bullish and the market starts to go down, if it starts to go down to a particular point, you're going to get out no matter what. Okay, that's what we call the first exit. Now the second exit is having a basic understanding of how the markets work and the charts work, and you know that you might be in a trade and it might start to go sideways like this, but your stop might be down here. Make sense? And you know that your trading strategy shouldn't do that. If you're in a good trading strategy, that the market should just simply take off, and if it doesn't, it goes sideways. This is now your second exit strategy. So you always want to be looking to cut your losses early by doing this, okay? And 4, you're just looking to trade an okay system. You don't need a fantastic whiz-bang system. The biggest myth out there is that we need to have a really good trading system to do really well in the markets, and that's simply not true. We just need an okay system, okay? We need an okay system because if you, let me ask you a question. If you have a really good trading system, but you don't know how to cut your losses short and let your wins run, actually do that, meaning watch the market stay in profit and continue hold it for profit, and meaning when the market goes against you, getting out early. If you don't know how to do that, if you don't know how to do that, then now you've turned a good trading system into a bad trading system, and now you think it's the trading system that sucks, but it's actually you that sucks because you're not trading the system properly. Make sense? So all you need is an okay trading system, and as long as you're cutting your losses short by understanding these 2 stop management, okay? So what I like to do in every trade that I'm doing, this will be my first stop here, okay? This will be, if the market starts going sideways on me, even if it hasn't hit the stop, I have the first exit, and this is obviously the guaranteed second exit, okay? What I generally do is that if my risk here overall is, call it $1 on the actual share price, okay, or $1 on the actual market price, I'm looking for at least $2 profit. So that's what I'm setting up every single time. Make sense? But if I'm cutting, say, 50-60% of my losses at 30 cents loss, can you see how that's now increased my reward overall? Make sense? So now I can actually have a really bad win-loss ratio and go through a bad period and still make money. And this is what we do. This is what we actually talk about: having the odds on your side. Okay? But it's really important that you've got to have a center direction. This is where number 5 would come into it, and that'll be chart reading. Okay, charting basically, charting, and this is where good charting analysis would come into it. I've actually had times where I've only been 30% right, but by understanding this whole trade management and having an okay trading system, not a flashy trading system, okay trading system, really good at understanding how the charts work, trading first or second in the money, minimum 6 weeks out, all of these things start to compound of doing really well and giving you the advantage of being well in the markets, okay? Don't be fooled out there by trading now what we call above the price. If you start trading up here, they look cheap. And because they look cheap, you actually want to start to buy them. But this is now going to sit. This is where you start talking about a 50% win-loss ratio, a 50% loss, and so on and so forth every single time you trade them. Okay. But once again, I've had a 30% win-loss ratio. I've still done really well. Anyway, guys, I hope you understand that this is some things to look out for. Trading options is not risky, guys. Okay. This whole thing about options trading is risky. It's not. It's what you do with the option that's going to help you do really well in the markets. Make sense? And talking about that, if you'd like to learn my trading system, if you'd like to learn how I read the market, if you'd like to see my Super Trader formula and get it for free so I can walk you through it personally, one-on-one with you, then click on the button below right now. Go take another page. We can learn more information about who I am and what this whole thing is all about and how I can actually help you for free. Alright guys, John Howell here. Official JohnHowell.com. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.